Hi, welcome back here with Trading Hour. Now, the currency markets have been in turmoil with the US dollar's sharp rise and a weakening rupee, and this affects companies which have a higher Forex exposure. Sonal is standing by the big wall to tell us about all of these companies and their exposure. Hi, Sonal.
Thanks a lot for that. Well, the weakness in rupee is all one can talk about, right? And it has broken previous records. That is something that happened last week. So my colleague Yusuf and I thought, let's look at some data to focus on which companies have a higher Forex exposure. So 71 companies from the BSE 500, and this excludes banks and financials, have a foreign currency exposure of 3.5 lakh crore rupees. They have aggregate borrowings of 15.2 lakh crore rupees, out of which 23% is foreign currency loan. This is as per data from ACE Equities. And sectors which have the highest foreign loan exposure are chemicals, refineries and healthcare as well. So breaking it down to individual companies now. The one with highest percentage of exposure to foreign debt. Alkyl Amines, small loan amount 23 crore rupees, but 100% of it is in foreign currency. Glenmark Pharma with almost 90% of debt in Forex. We have Shipping Corporation at 100% of the debt from there. Oil India at 85%. There's Adani Ports which has 66% of Forex loans. UP at 61.5%. There's Polyplex at 58%. SGVN at 55%. ONGC at 53%, to name a few out of the entire list. So it will, of course, lead to higher interest outgo in case of dollar-denominated loans and also higher expenditure, so to say. Important to note, the breakup of the Forex loan in a specific currency is not available to us. But some examples also that I wanted to point out of this lot. A lot of these companies have substantial export revenues as well, thereby negating the impact of higher interest outflow due to dollar strengthening, because earnings for them also will be higher, right? Now, the revenues in export markets could be a lot more for these companies, and of course, it not necessarily denominated in dollar. Alkyl Amines has Forex exposure of 23 crore rupees in terms of debt, but they have 270 crore worth of export revenue. UPL has 16,000 crore debt in foreign currency, but at 36,000 crore rupees revenues coming in from exports, out of which 7% is from Europe and 37% is from North America. So that's a big amount. Glenmark Pharma has 3,300 crore of debt that is in foreign currency, but 6,700 crore of revenues coming in from exports. And Sudarshan Chemicals has exports to 80 plus countries. It has almost 1,000 crore of revenue coming in from exports versus a 480 crore rupees of foreign debt. Additionally, as per Bloomberg, nearly $11 billion worth of foreign currency notes are getting matured over the next 1 year, while bonds worth $500 million each are maturing in October for NTPC and BPCL. Next year would see bonds of similar values getting matured for Vedanta Resources, there's IOCL, ONGC Videsh and some of the other companies on screen. Now, when we are talking about loans, let me focus on revenue exposure as well for more names, especially in the specialty chemical space, because a lot of them have high amount of exposure. Many of the companies have huge exposure to exports because India's exports in terms of chemicals hit a record high at $29 billion, that is in FY22. It is up from $14 billion in FY14 itself. We have names like Vinity Organics with 69% exposure, Clean Science at 70%. There is Galaxy Surfactants with 62% revenues coming in just from exports. For fine organic, Naveen Fluorine, Atul Limited, NoSil, Aarti Industries, Deepak Nitrite and Alkyl Amines, the exposure is anywhere between 17 to 70% in the list that I have mentioned. And out of this, for some companies, we know the exposure to Europe as well. And that is where we are seeing crisis due to energy prices. And this is something that could put pressure on demand as well and impact their Europe revenues. So the numbers on the screen are the percentage of exports to Europe as a percentage of the total exports. Anupam Rasayan has 46% of total exports to Europe, which is followed by Vinity Organics. There is Naveen Fluorine, which has 60% exports to Europe out of the total export revenue. PI Industries at 10%, Neogen at 27%. Of the total exports to Europe. So many companies have sizable exposure to Europe as well, making them vulnerable to demand and added woes of currency depreciation there as well. Now, important to note that every company has its own hedging mechanism in place, so the net effect on earnings depends on that. But these are just some numbers that we wanted to focus on for you.
Okay, Sonal, thanks very much for that. We're going to take a very quick break now, but as we do that, here's some great news for investors. If you want to track the US market action, you can do so in real time. All you have to do is log on to Money Control website or app and stay informed about all that matters in